Good morning, everybody. Good morning, all you magnificent melon heads of the world. I hope you guys are well and happy Friday, everybody. Today is September 13th, 2024. Happy birthday, Mini-Me. And also, the big story this morning, guys, I have to say, it is Boeing. Well, there's two big ones this morning. There's Boeing and there's the Wall Street Journal. I don't know which one's bigger. We're going to go in alphabetical order. Boeing, workers are on strike. The International Association of Machinists and Aerospace Workers has gone on strike. 33,000 of them on the West Coast. They voted overwhelmingly. 94.6% voted in favor of rejecting the offer by Boeing. Boeing had earlier this week, we had talked about it, they had offered a 25% raise over the next 4 years to their workers to try to avoid this strike. 94.6% of Boeing's workers voted to reject that offer of a 25% raise. The Boeing workers have been asking for a 40% raise. So now they are on strike. They have effectively shut down the all-important manufacturing plant in Seattle, Washington, where the 737 MAX is manufactured. This is a big deal, guys. The 737, that moves GDP. If this strike lasts more than a couple of days or a few weeks, then this could actually affect gross domestic product for the whole freaking country. And Boeing already has plenty of problems ever since the blowout of the panel on that Alaskan Air flight earlier this year. Boeing has had problem after problem, whistleblowers winding up dead, orders getting delayed or canceled. There's been a lot of problems over at Boeing. This certainly is not going to help things. Although the stock is having kind of a muted reaction to this story. Earlier this week, the stock had rallied several percent on the news of Boeing's offer and that they were probably going to avoid the strike. Well, it is selling off a little bit this morning, but not as much as it gained when Boeing made the offer earlier this week. So the stock is having kind of a muted reaction. Market is kind of saying, well, I guess this isn't that big a deal. Or maybe, just maybe, this market has been bludgeoned over the head with bad Boeing news so many times this year that we've just become desensitized to it. We're like, oh, bad news at Boeing. That's like things blowing up in the Middle East. It just happens daily, all the time. I'm not trying to make light of these things, but the market doesn't seem to care. 33,000 people going on strike. Any other company, that's going to send that stock down double digits. Boeing's just like, well, it's just Friday. That's kind of how things go for us at this company. Also going on this morning, or I should say yesterday afternoon, I got some messages on Twitter about this. There was an instantaneous almost doubling of the odds of a 50 basis point rate cut by the Federal Reserve yesterday, as indicated by the CME's Fed Watch tool and interest rate futures. Yesterday morning, the odds of a 50 basis point cut were something like 18, 19%. They were bouncing around that low level. The lower inflation prints from CPI and PPI all but guaranteed that, in my opinion. And, well, I guess the Fed didn't like what the market was doing, and so they sent out their boy Nick Timiraos, otherwise known as Nicky Leaks, the guy at the Wall Street Journal, the Fed's mouthpiece, because he came out with an article yesterday afternoon in the Wall Street Journal, and we'll cover that article in a little bit. After Nick Timiraos' article, the odds of that 50 basis point cut instantly jumped. They went almost even to 50-50. Now they're currently about 60-40, still favoring a 25-point cut, but nowhere near the, in my opinion, cut and dry 25 that we were looking at just a day ago. So Nick Timiraos once again acting as the unofficial mouthpiece of the Federal Reserve. And, I'm just going to go ahead and posit this. Since this unelected bank has this unelected mouthpiece, a journalist, we'll call Nick Timiraos a journalist, since he is being given vital information that controls the movement of hundreds of billions of dollars around the world by an institution that controls the value of the U.S. dollar, is anybody looking into who Nick Timiraos talks to, what goes on his computer, who gets this information? Because this is information that is vital to the functioning of a free market. And I use that term very loosely because we don't really have a free market. But Nick is getting this information first. What is he doing with it before he gives it to everybody? And who else is getting it first? This phenomenon of vital information getting leaked by the government. And when I say government, I'm gonna include the Fed here, even though the Fed is a private institution. It's not necessarily government, but the Fed is controlled by the same people who control the government. So who cares? Uh, who's Nick talking to? And are they trading? I think this is important because yesterday morning, I remember gold and silver were up sharply and there was no reason for it. There was no justification for that huge move in precious metals yesterday. And then a few hours later, Nick T comes out with this article that says, hey, we might go 50. Of course, that is something that would send gold and silver higher. So who got this information first? And my computer is frozen up here. I don't know. Am I still frozen? Son of a gun. Did I just lose internet? It's saying I'm still live here, guys. I froze. What happened? I froze. We're still going. I still got a timer clicking here. I don't know what's happening on my machine here. I'm going to close some windows. Oh, it looks like my internet. You know what? I said too many bad things about the Federal Reserve, and now they shut down my internet. Is that how this works? We're going to give it a second here, guys. Bear with me. All right. Am I working here? Oh, son of a gun. All right. I don't know what to do here. Can you guys let me know in the chat. Do you still have audio? Is it just my picture that's frozen? If we still have audio, I'm going to keep going. Okay. They say they hear me fine. All right. Yeah. I said one too many mean things about the Fed. It looks like it's my video feed alone. So we're going to, you know what? We're just going to keep going ahead, guys. I'm apologize about the grainy picture here. I guess I just said too many bad things about the Fed and Nick T's computer, and well, we had to shut that up. All right, some other things we're going to talk about, and then hopefully the picture stops lagging here. We've also got Adobe reported this morning or yesterday after the bell. Earnings and revenue both beat expectations, but the stock is selling off hard here because they guided light for the fourth quarter. The stock is flat year to date, but has more than doubled since the unveiling of ChatGPT in November of 2022. So interesting there. The company made some comments on the conference call that they closed a bunch of deals right before the end of the quarter, and then they guide light for the following quarter. It almost looks a little bit like channel stuffing over at Adobe. I said almost. Don't jump down my throat there. But Adobe stock is getting clobbered on that light guidance for the following quarter. It's a story that's somewhat we'll say dampens the AI mania narrative. Also going on this morning, we have got Oracle going on. Oracle is surging for the second time this week. Now, earlier this week, Oracle reported a big-time bump in earnings and revenue, a big beat off of their cloud compute business. That sent the stock surging. Well, this morning, they're at their yearly briefing for financial analysts, and they just went ahead and raised their guidance again at this meeting. They raised guidance for the current quarter to for 2026. They raised their guidance to $66 billion from $64.7 billion. And they also forecast revenue in excess of $100 billion by the end of this decade. Not really sure what that means or what they're basing that on, but Oracle stock is surging based on that news. And this grainy picture is really killing me this morning. Let me just flip my camera off and then on. Try the old IT trick. We'll see if that changes anything. I don't know if that's going to help or not, but we're back on now. No, it didn't help. China has raised their retirement age for both men and women, trying to address the decline in their workforce. We've got also China has just issued a record penalty to PricewaterhouseCoopers for their role in the Evergrande fraud, the biggest accounting fraud in history to date. And interest payments on the national debt have officially exceeded $1 trillion for the first time ever. It's what a great economy. It's just the best economy ever. And that's why the government's spending $1 trillion a year on interest. And the U.S. budget deficit is now approaching $2 trillion for the fiscal year. It's at about 1.9 right now. If the economy is so good, why are we spending $2 trillion more than we're taking in order to artificially juice GDP? That's a question nobody wants to ask our politicians. They seem content to talk about things like in vitro fertilization during presidential debates instead of, hey, $2 trillion in debt this year, $1 trillion in interest. You guys maybe want to start thinking about doing something about that? Well, who knows? Anyways, why don't we shrink my big melon of a frozen head this morning while we do this? Don't forget that like button, guys, and that subscribe button. We do this every morning, and we normally don't have this choppy picture every morning, but we have it this morning. So come have your coffee with the melon heads as we go through markets. And let's see what happened to my image here. Right now, the S&P 500 is up 12.7 points, about 0.25% higher ahead of the opening bell. We've got the Dow is up by 140 points, 0.34% higher. It started surging just in the last 15 minutes or so. I'm not sure what took it up there, but it is rising once again. And the NASDAQ is actually negative this morning, down 16 points or 0.09% lower. Looking over at the DXY, we've got the dollar is sharply lower this morning by 42 basis points or 0.41%. I am sure that has a lot to do with Nick the Pig's article. More rate cuts equals weaker dollar, guys, any way you look at it. And so the DXY is moving lower. That is going to put some upward pressure on stock valuations this morning. And I also want to point to the Japanese yen. It is surging once again this morning. This is the chart USD JPY. Remember, as you see this chart moving lower, that is the yen strengthening against the dollar. And we have got a sharply stronger yen this morning. Let's zoom in a little bit more on that here. Sharply stronger yen. We have now taken out the lows from August 5th. Look at that. We are well below the low we saw on August 5th here. 140.58 yen to the dollar. That's down from about 142 yesterday. So keep in mind, guys, the yen carry trade, and as we're talking about the prospects of a bigger Fed rate cut, as the Fed cuts and as the BOJ hikes, the interest rate arbitrage between the United States and Japan is shrinking. And so if we do get that 50 basis point cut from the Fed, that's going to shrink that gap even faster. If the Fed is not careful, they're going to cause a big problem with the unwind of the yen carry trade. And we got a sneak peek of that on August 5th. It was ugly. Also going on this morning, we have got bonds are sharply lower just as soon as this chart updates. My internet is really getting on my nerves this morning. All right, the yield curve is down across the board. We got the 30-year Treasury, 3.98%. That is down 1.5 basis points. The 10-year Treasury, 3.654, down 2 basis points. The 2 year is at 3.576. That's down 7 basis points. Big move in the 2 year this morning. And the 1 month is down again, 5.049, down 3 basis points. This is going to be 5% pretty much by the end of the week here as the Fed rate cut gets closer. We could go under 4 if the odds of this Fed rate cut of 50 points keeps increasing. Also going on this morning, commodities sharply higher once again. New all-time high for gold. Congratulations to the stackers. I like this shiny. We've got spot gold at $2,575, almost $76. That's up $17 or 0.68% higher this morning. Look at December gold futures, $2,600. New record for gold. Congratulations once again. And silver's getting in on the action this morning as well. We've got spot silver, $30.46. That's up 58 cents or almost 2% higher for spot silver. We've got coppers up by 0.4%, platinum's 2% higher, palladium 2.1% higher, and even crude oil's higher again this morning, $69.94 for October WTI futures. That's up over $1 here, not quite $70. So some signs of life in the oil space here. Also, take a look at the silver chart, guys. Nice big 2-day move in silver, back above $30. And it was that big move in silver yesterday that makes me wonder, who is Nick Timiraos talking to? If he's getting information direct from the Federal Reserve and he's sharing it with anybody, and any of those people are trading on that, that is insider trading. And somebody was buying gold and silver yesterday ahead of this article in the Wall Street Journal. I don't know who it was, but the bull case for gold and silver was not any stronger yesterday morning. Not until that article came out did it make sense. So I wonder who was trading yesterday? Who was buying all that gold and silver yesterday morning? That is an interesting question. Maybe the Commodities Futures Trading Commission wants to look in on that. I mean, when you guys aren't busy tamping down enthusiasm for precious metals, and SEC, when you guys are busy doing absolutely nothing about anything, maybe you guys, when you're done with all that, you want to take a look at who is trading on this Fed information before it comes public. Just a thought. I just throw it out there. You guys do what you want with them. Also, guys, let me know in the comments, is my audio feed still good, or am I talking to myself? That would be interesting to know that. But we must press on. The Bitcoin is down $356 this morning as priced on Coinbase, $57,769. Now, it is curious that we're not seeing Bitcoin rally. This is interesting, guys, and this is telling me we need to pay attention to Japan. because Bitcoin should be rallying along with gold and silver on prospects for a weaker dollar and bigger than expected Fed cuts. But that's not happening. Maybe one reason that's not happening is because Bitcoin is also being propped up by the yen carry trade. And if we're looking at bigger rate cuts from the Fed while the BOJ hikes and the shrinking of that arbitrage, well, then the unwinding of the yen carry trade would be very bearish for Bitcoin, as we saw quite clearly on August 5th. You see that on August 5th, that was an ugly day. So it's possible Bitcoin is not reacting to prospects of a bigger rate cut here because Bitcoin is struggling with the unwind of the yen carry trade. All right, we've got Boeing Seattle workers walk out in the first strike since 2008. The move will cripple production at Seattle's commercial jet hub. This is bad news for the whole U.S. economy here, guys. 33,000 workers have gone on strike at the U.S. manufacturer. Boeing's factory workers walked off the job for the first time in 16 years, halting manufacturing across the plane maker's Seattle hub after members of its largest union voted overwhelmingly to reject a contract offer and go on strike. That contract offer was for a 25% raise over the next 4 years, and they rejected that by a huge margin. Members of the International Association of Machinists and Aerospace Workers, which represents 33,000 Boeing employees across the U.S. West Coast, stopped work at midnight on Friday. Hundreds of workers manned picket lines at the Renton factory outside of Seattle that makes Boeing's top-selling aircraft, the 737 MAX. Machinists voted 94.6% to reject Boeing's offer, and 96% supported a strike. Now, that's interesting, guys. You had more people voted to go on strike than you had voted to reject the offer. So there was 1.4% of these machinist guys who wanted to accept the raise but wanted to go on strike anyway. I couldn't help but notice that little statistical oddity, but I digress. While both parties have expressed a desire to get back to the bargaining table, the move adds to the strain on Boeing. The company was already reeling from the fallout over quality lapses after the near catastrophe at the start of the year, which spurred investigations, a customer revolt, and an executive shakeup. Boeing stock is down. I'm going to say it pretty modestly here. Boeing stock's only down 2%, trading at $159.36. Now, that's down $3.50 here. But I would add, guys, earlier this week on Monday, we had a much bigger jump. This stock was trading at $157.70 before the announcement about the proposal for the 25% salary increase. That sent the stock surging up to 160 and change. But we're still higher than that level. So there's still a little bit of optimism priced into Boeing shares here, or Boeing shareholders are just desensitized to bad news. One or the other. I'm not sure what's driving things this morning. And we got this one from the Wall Street Journal. I think this is what is changing those odds of a Fed rate cut this morning. And keep in mind, guys, Nick Timiraos, he is widely viewed as the Fed's mouthpiece, as Jerome Powell's preferred leak. I heard Zero Hedge referred to him as Nicky Leaks this morning. I got a kick out of that. But Nick Timiraos is saying the Fed's rate cut dilemma, start big or small. You'll notice he's saying that is a dilemma. A dilemma is not a problem that has a solution. A dilemma is a choice between two lousy options, and that is what the Fed has here. They have a mandatory choice between two lousy options. The Federal Reserve Chair Jerome Powell faces a difficult decision as the central bank prepares to cut interest rates next week. Start small or begin big. The central bank is set to reduce rates for the first time since 2020 at its meeting on September 17th and 18th because officials have signaled greater confidence that they can make multiple rate cuts over the next several months. They're confronting questions over whether to cut by a traditional 25 percentage point or by a larger half a point or 50 basis points. Powell kept all his options on the table in a speech last month in Jackson Hole, Wyoming, that surprised some of his colleagues with the unambiguous call to turn attention to incipient risks in the job market. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks, he said. Officials last year revised their benchmark rate to around 5.3%, a two-decade high, and will have it held at that level for 14 months to combat inflation, which has declined notably. Now, we're going to scroll down here because I think these are the comments that really sent the odds of that 50 basis point cut surging here. The Fed normally prefers to move in increments of 25 points or 25 basis points, because smaller adjustments give them more time to study the effect of their policy changes. Some officials have suggested they would rather speed up the pace once the economy looks like it's weakening further. Alternatively, officials could conclude that if they expect a 50 basis point move is likely in November or December, they ought to make that move now when rates are farthest from their ultimate destination. And it's that comment that if they're going to go 50 in November, why not just go 50 now? That is what sent the odds of a 50 basis point cut in the CME futures surging. The case for starting smaller presumes the economy is fundamentally fine, which is what they've been telling us all year, right? It's the best economy ever, the soft landing, all that bullshit. According to current and former officials, they say starting with a 50 basis point cut could communicate greater alarm about the economy. I agree with that. Or lead markets to anticipate a faster pace of cuts, which in turn might ignite market rallies that make it harder to finish the inflation fight. Now, look, they're not considering the downside here. If they do go 50, number one, that alarm that they're communicating to the market, maybe that spooks the market. Well, if the Fed's going 50, maybe that's because the economy isn't as good as they're telling us. Maybe they trigger a sell-off. And the other thing they're not talking about is Japan. And I searched, there is not one mention of Japan or the carry trade or the interest rate arbitrage anywhere in this article. And remember, guys, the unwind of the yen carry trade and just the fear of it was enough to start a panic on August 5th. That has not gone away. I don't care what they say, what JP Morgan's analysts say in Bloomberg with their arbitrary number generator saying it's 50% or 3/4 unwound. It just doesn't work that way. That unwind of the yen carry trade risk, it's still out there. And if they move 50 points, then they're going to close that gap between the U.S. and Japan much faster. And that could reignite that panic from August 5th. Nobody is talking about that, but they need to. They need to start thinking about that. Now, look at the CME futures right now. 41% likelihood of a 50 basis point cut. We're still 59% likely that they do 25, but they have doubled in just 24 hours off of that Nick Timoreo's article. And once again, who was buying gold and silver yesterday morning? And did they get any emails or have any conversations with Nick T or anybody at the Wall Street Journal that morning? Inquiring minds would like to know. Somebody got tipped off about this Wall Street Journal article yesterday, and it sure as heck wasn't me. That be insider trading, y'all. All right, let's shift gears a little bit now to Adobe. Adobe forecasts a downbeat quarterly earnings on cautious tech spending. And Adobe, they reported pretty good earnings, but that guidance came in a little light. Photoshop maker Adobe forecast fourth quarter earnings below analyst estimates on Thursday, signaling stiff competition and soft demand for its AI integrated editing tools amid challenging economic conditions. Shares of the company fell 9.2% in extended trading. High interest rates and a tough economy have led enterprises and individuals to focus on cutting costs, putting pressure on Adobe's growth. The San Jose, California-based company also faces competition from startups such as Stability AI and Midjourney, which provide similar AI services, including generating images from text prompts. By the way, all of those tools suck beyond all recognition. Adobe expects revenue for the fourth quarter to be between $5.5 billion and $5.55 billion, compared with LSEG estimates of $5.61 billion. So we got some light guidance here from Adobe. Now, some analysts were asking on their earnings call, hey, what's up with your light guidance? And Adobe made some comments about how they had just closed some big deals at the end of the last quarter, so they pulled forward some revenue. And, well, that does kind of sound a little bit like channel stuffing, doesn't it? I'm not accusing anybody of anything, but it does resemble it. And, well, they're guiding light next quarter because they pulled forward earnings into this quarter. Well, if it quacks like a duck. Adobe stock getting clobbered this morning, down about 8% here, trading at $540 even. That is down 7.8%, or about $45 lower. Adobe stock was basically flat for the year. It's going to be negative for the year now, although the stock has doubled since the release of ChatGPT at the end of 2022. Speaking of AI stocks, let's shift gears over to Oracle, because Oracle stock pops again. It's all about the cloud. Oracle is doing a lot of hype in here, a lot of song and dance, making some very big talking points, propping their stock up. And this is just a few days after their stock already popped on an earnings beat. Oracle shares look set to cap a strong week with another move higher on Friday after the tech giant charmed investors by flexing its cloud infrastructure muscles. The stock was up 5.9% to $170.84 in pre-market trading, compared with a 0.2% rise in futures in the benchmark S&P. Oracle's gains came after the software company's yearly briefing for financial analysts, where it lifted its guidance for fiscal 2026 sales to $66 billion, higher than the $64.7 billion figure that analysts had predicted. Oracle also forecast its annual revenue could top $100 billion before the end of the decade. Hitting those numbers should not be a problem, CEO Safra Catz said on Thursday's event. Might as well just make it $1 trillion while you're at it, Oracle. I mean, the stock earnings are doubling on a monthly basis, and it's perfectly reasonable to assume that growth rate will continue forever, right? And that bubbles like this don't suddenly burst and send stocks crashing. That never happens. This is a quote from their CEO. We were able to talk with several AI startups that are using Oracle Cloud Infrastructure, he wrote. They all were able to confirm that claims that Oracle has a strong AI offering, especially around training and network costs, better availability of AI capacity, and attractive price points are adding to Oracle's advantage here. So they were able to talk with several AI startups about Oracle's cloud infrastructure. I wonder, did Oracle talk with any of those AI startups and ask them, hey, do any of you guys make money? Of course, he didn't ask that because we all know the answer to that is no. Did he ask any of those AI startups, hey, do any of you even have any revenue or a marketable product whatsoever? No, he didn't ask that question because the answer from probably half of them would have been, no, we don't have any revenue whatsoever or even a marketable product, nor plans to have one anytime soon. But as long as that CapEx keeps flowing, as long as the hype keeps going, we can keep afford to renting your cloud products. And so Oracle's coming out and saying, sure, $100 billion by the end of the decade. Next week, maybe it'll be $200 billion. Got to keep that CapEx flowing. Oracle stock up almost 8% here, $173.70, up $12 this morning. And guys, that's after Tuesday morning when the stock also rallied several percent. We started the week at $140 and we are now at $173. AI mania continues unabated. We also got some news from China. China raised their retirement age for the first time since 1978. We're going to speed this one up a little bit because we're getting low on time here. Retirement age for men and women will rise by up to 5 years. Interestingly enough, the retirement age for men is higher than it is for women in China, even though women live longer. Why do women automatically get a longer retirement? Well, that's a question to ask the Chinese. Top lawmakers endorsed a plan to delay retirement for employees by as long as 5 years, Xinhua News Agency reported Friday. Men will retire at 63 instead of 60. Women will retire at 55 instead of 50 for ordinary workers and 58 instead of 55 for those in management positions. The change will take place over 15 years starting in January and will allow more people to work longer. That could boost productivity to address challenges of an aging population, although it risks adding to public discontent with the economy growing at the worst pace in 5 quarters. So, guys, we've talked about it on this channel, but China has a demographic collapse that's ongoing. Their population is shrinking. They're going to just run out of workers. They're aging, and there's not enough people being born. There's not enough people aging into the workforce as so many people age out. And so China's fighting that by raising the retirement age and forcing people to work longer. Kind of sucks if you were planning on retiring anytime soon in China, although you're probably not going to retire in China anyway because all your wealth was tied up in the real estate investments that are now not worth spit in that country anyway. So China's economic problems persist. We also got China levies a record penalty on PwC over the Evergrande fraud, the biggest fraud in history. Let's see, what is China's? The accounting firm was fined $441 million. That's the $62 million fine for PricewaterhouseCoopers for its auditing work on Evergrande's inflated financial reports from 2018 to 2020. That's according to statements by the Ministry of Finance. The regulator also ordered the closure of PwC's branch in Guangzhou. And you can see from this visual here, guys, this is the size of the Evergrande accounting fraud, $78 billion in inflated sales. That easily dwarfs Enron, WorldCom, Luckin Coffee, all of the biggest accounting frauds in history, nowhere near the size of the Evergrande fraud. And congratulations to our U.S. government for being just absolutely the worst. Interest payments on the national debt top $1 trillion as deficits swell. The Federal Reserve is holding benchmark rates highest in 23 years. That has led to the government laying out $1.049 trillion on debt service, up 30% from a year ago. And the jump in debt service costs comes as the U.S. budget deficit surged in August, edging closer to $2 trillion for the full year. Almost 8% of GDP now is being driven just by U.S. government deficit spending. You got to love it, guys. It's the best economy ever, and that's why we need $2 trillion worth of deficit spending to make it look like the economy is growing. And I just want to say thank you so much to Steve Woitis, who says, do you think that gold and silver's current run is sniffing out higher probability of a 0.5% Fed rate cut? Yes, I do, Steve. I think that is responsible for the big move yesterday morning. And I mentioned it earlier. Somebody got wind of that Nick Timoreos article, or that the Fed was more likely to go 50 than 25. Somebody got wind of that and started trading on it. It's BS. We've been seeing this happen more and more frequently as government data gets released to super users or financial elites before the rest of the public gets it, gives those super users an unfair advantage over the rest of the market. It is BS. It's happening more and more frequently. Hedgeye did a video about this I think it was like 2 weeks ago, and they showed some really grotesque examples of it. Yesterday morning was another one, and the regulators are doing nothing about it because the regulators basically are the same people because of the revolving door between the big banks and the big trading houses and posts at these regulatory positions. So why would the SEC or the CFTC ever do anything to stop this? They are the ones getting rich off of it. Thank you very much, Steve Woitis, for the super chat, the support of the channel. And thank you to Jim Watari, who gifted 50 Nobody Special Finance memberships. Thank you so much, Jim, for your generosity, sir, and for supporting the channel. That is a lot of new melon heads. Hey, you 50 new melon heads. Be sure and say thank you to Jim. That was very nice of him. Welcome, sir, welcome 50 sirs and madams to the melon heads. Appreciate that very much, Jim. And thank you to Static Cat. Not to be confused with Dynamic Cat, but thank you very much, Static Cat, for joining the ranks of the Melonheads as well. Welcome. Thank you for supporting the channel. I appreciate that very much. And Uncle Fedster is back. Thanks, Uncle Fedster, for the super chat. He says, happy Friday, Jack. Gold to 3,000 by year end. 3,000, that's a bit much. I would not object. If gold wants to go to 3,000, please don't let me stand in the way. That being said, what is that? About a 20%, not quite a 20% move in gold. And we're talking less than 3 months, a little more than 3.5 months to do it. That would be a pretty wild rally. I think the Fed would have to go 50 several times this year in order to get 3,000 by year's end. I wouldn't rule it out, but I'm going to say 85% no, 15% yes. All right. Slight chance that we see a rally that big in that time frame. That being said, I think gold is definitely going to 3,000 sometime soon, within the next 2 years. Certainly, I think we'll see $3,000 gold. And let me also put the asterisk that also assumes that there is not a black swan liquidity event that causes a sudden surge in the dollar and a wave of defaults. That could always happen. Gold will not perform well in that environment, but the ensuing Federal Reserve Zerpenber will probably propel gold much higher after that. Thank you very much, Uncle Fedster. Appreciate the super chat and the support of the channel. Thank you, Van E. or Vane. He says, Claudia, I cannot pronounce that middle name. We'll say Aguirre Dallas, Fed NGO, Baker Ripley fraud. Oh, wow. Okay. A lot of keyword rich search terms there, Van E. or Vane. I got to look into that. Claudia Aguirre, Dallas Fed, NGO, Baker Ripley fraud. Well, when I see fraud and Fed in the same sentence, I figure you're generally on the right track there. But you know what? I'm going to have to write down some of those names and look those up, Vanny, because you got me. So thank you very much for the super chat and the stump the dummy this morning. But I do not have an answer for that one. Although, hey, Fed, fraud, they're practically the same words, aren't they? Thank you very much to Mr. Van E. And thank you, Richard Bell says, Cushing running very low, huge oil price increase. Cushing's running low probably because of the shutdown along the Gulf Coast caused by Hurricane Francine. I think that's probably going to be a one-off. It's going to process through. We're going to see some pretty wacky data next week. I think the inventory levels will almost certainly be much lower caused by that slowdown in production along the Gulf Coast. But I think it's going to rebound fast. Now, does that mean we see an oil increase between now and then? Quite possibly. We've already seen a couple of bucks in the last 2 days. We went from the mid-60s to we're pushing $70 for WTI this morning. So that could happen. But until the demand picture changes, I don't think we're going to see any significant move, probably not oil back in the 80s until we get some confidence about demand. Although I would add 50 basis point cuts at the Fed. If the market starts to believe that's going to juice the economy higher, that could result in some additional oil consumption or some forecasts being raised for oil consumption. So it is possible. I would say the picture for oil is looking better today than it was yesterday. That is for sure. Thank you very much, Richard Bell, for the super chat, sir. And thank you to Mike Kathman. Says long-range missiles, cash or gold. Long-range missiles referring to probably President Putin's repeated comments that the use of long-range U.S.-made missiles against targets in mainland Russia will result in war between Russia and NATO. Putin has been saying things like this for quite a while now. Now, calling the bluff of men like Vladimir Putin is not exactly a recipe to a long, healthy, and prosperous life. He's not really somebody who bluffs. That being said, it's not really new. We've been hearing about this for quite a while. So I'm not panicked about the long-range missiles. I do think it's an area for concern. But the prospects for cash and for gold, I don't think the Russia-Ukraine story really weighs one way or another on that. There's plenty of reasons to be in cash. There's plenty of reasons to be gold. I don't think the war in Europe is really that big a reason for either of those, to be honest with you. Although there's still plenty of reasons. Thank you very much, Mike Kathman. Appreciate the super chat, sir. And thank you to Matt Peterson, who says, thanks for cutting through the bull every day. You know, I try, and I guess I cut through some sensitive bull today because I don't know what happened with this grainy picture all of a sudden. I don't know why the audio feed is coming through fine, but the visuals are interrupted. I've never seen that. I've had my blue screen of death every now and then, but this is new. So I guess I have to just sit still because if I move around too much, it makes the choppiness of the video feed look even worse. But you are very welcome, Matt Peterson. I'm glad you appreciate me cutting through the bull, and there was plenty of bull to cut through this morning, that's for sure. Once again, my big question, did anybody find out about that Wall Street Journal article? Who did they tell, and did they trade on that? Someone's got to look into that. I don't know. Nobody else is. Certainly not the SEC, certainly not the CFTC. But that's all I got for you guys this morning. I just want to say thank you so much, guys, for your generosity in the super chats and with the memberships. I appreciate that very much. Apologies for the technical issues in the video feed getting all choppy this morning. Not sure what that was, but we will be back at 3:15 p.m. Eastern time, hopefully with a nice smooth feed for my weekly wrap-up live stream. So I'll see you guys this afternoon. Thank you to my Patreon supporters and magnanimous melonheads for everything you guys do for the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.